So we are back at it with another investing video. Today specifically, we'll be talking about how I'm running the wheel strategy. This is an options trading strategy, and in my opinion, it's probably the least riskiest one out there as well. So with this strategy, I'm able to make roughly $200 a week on average, and I'll be teaching you everything that I learned throughout the last few months, what to do and what not to do, and just the overall strategies and tips on how I'm able to do this. So welcome back to the channel, guys. If you guys are brand new, my name is Bruce Wang. Typically, I'm only a dividend investor and a real estate investor, but now I've kind of branched on and I've been trying new things in the stock market and when it comes to investing as well. So typically, dividend investing is very boring, is very slow. And again, that is what I'm interested in. I'm not trying to turn $100 into $10,000. I'm in it for the slow and steady returns, stable returns from dividends and from option premiums. $200 a week for a whole year, that's roughly $10,000. So that's my strategy. That's how I'm planning to implement all of this, and I'll be teaching you in this video. So now with that disclaimer out the way, this is my updated portfolio for today, September 29th, 2020. My portfolio value is sitting at just under $105,000. My annual income when it comes to all the dividends that I'll be receiving throughout the year comes out to a total of $3,293. I update this every single week, so don't forget to subscribe and follow if you guys want to keep updated with what I'm buying and all the new things that I'll be adding onto this portfolio to try to increase it. So these are my monthly breakdowns of my income. September was a big month for me when it comes to dividends, and January, is going to be the lowest month. And this is how things are looking up. Coca-Cola, Nike, these are some of the companies that are going to be paying me dividends this month. So with the update out the way, if you guys are interested in anything that you see in today's video, links are going to be down in the description. You guys can get your free stocks. If you guys haven't signed up yet to any brokerages, you guys can see my entire portfolio if you guys want to as well. Join my membership if you guys are interested, and let's get on with the video. So the wheel strategy is also known as the triple income strategy. So I'll be teaching you all the ways that you guys can make money with this strategy and how I'm making some cash every single week from this as well. If you guys want to go more in depth into some of these topics that I'll be going over today, such as selling covered calls and selling cash covered puts, I made a playlist. This is an ongoing series here where I'll be updating you guys with how much money I've earned, how much money I'm making every single week and stuff like that. There are some weeks that I'm losing money, so this is not guaranteed here. This is on average. I'm roughly making $200 a week right now. So go check out the previous topics if you guys are just following this for the first time, but I'll give you guys a quick summary. Let's jump into the Robinhood portfolio so I can show you guys exactly what I'm talking about here. And if you guys are interested, you can follow along and also do the same thing. So my portfolio is sitting at just under $50,000. Earlier today, though, it was almost at $51,000. And I'm using this strategy with 2 stocks that I own. It is a good idea that you guys want to do this strategy with a stock, a company that you own already or you want to own. All right. So I'm going to show you a quick glimpse into some of the options that I've been doing and some of the stocks in my portfolio. So Square is the company where I'm generating the most premiums. I'm generating the most income. All right. And the next one has to be from my Gap trade. And lastly, we have Lemonade all the way at the bottom. So with this, this week alone, I'll probably generate roughly over $200. So on some weeks I'm making less, some weeks I'm making more. So on average, it's $200 a week. Here are some of the stocks in my portfolio. We have SPHD, Realty Income, ExxonMobil, AT&T. You can see a lot of these companies I own 100 shares or even more than 100 shares. And some of them I'm still working my way up to owning 100 shares. You need to own at least 100 shares of a company or have the cash to purchase 100 shares of a specific company if you want to run this strategy. I find that using borrowed money to run this strategy is not really a good idea because eventually if you lose out on a trade or an options or whatever, you have to pay it back. I'm not really trying to leverage my portfolio out really heavily, but I will borrow money here and there for some purchases and stuff, but make sure you have the money or you have the stock if you guys want to run this strategy. I think that is the best way to go about it. So the wheel strategy is not that popular of a strategy just because it's It's not sexy. It's not, make $10,000 a month. All right. This is more of a slow and steady grind and a great way to make steady income. It is just like one step above dividend investing. And that's how I graduated from dividend investing into doing selling covered calls and selling cash covered puts. All right. And we do that strictly for the premiums. All right. And I'll be showing you exactly what I'm talking about. So Square is a company that I am myself willing to hold out for the long term, the next 5 to 10 years. And if we take a look at Square right now, it's worth $165. If we take a look at my position, I own 112 shares currently at an average cost of $151.85. So we are going to jump into the options chain here for October 2nd. And I'll be showing you exactly my options that I purchased last week. Obviously, if I knew that the price of Square was going to shoot up like $4 or $5 in the last few days, then I would have not done this. But I made this options trade last week, and let's jump into it. So I have one contract already to sell 100 shares of Square at $162.50 by the end of the week. In my opinion, there's a high chance that this will get called away. And if it does, it's fine. I get my money back from selling all these shares. But if we take a look at the premium here, if you were to do this today, you would get a premium of $500. But you're not trying to, sell at that price because the share price is at $164. You would rather want to do out of the money calls here. And if we go up further on the chain, the strike price will keep continuing to rise. And you can see all the way on the right in the green box, this is the premium that you can earn selling these calls. So let's go into the $180. So if you were to sell one contract here of Square for $180, you would make $45 in premiums. So selling covered calls is half of the wheel strategy. You want to earn steady income every single week. You guys can even go out 2 weeks, 3 weeks, even up to a month out. And you can see the further out you go when it comes to the expiration date, the more premiums that you can earn. You can earn up to, if we take a look at the $180 sell call again, you can earn up to $465 if you go a month out. For me, I like to do weekly or bi-weekly. A month out for me, I'm still not comfortable doing a month out. So now let's jump into the second half of the wheel strategy, which is selling cash covered puts. So when you sell a cash covered puts, you're selling the obligation to buy 100 shares at the strike price on the expiration date. So what I mean by that, when I first purchased Square, this is how I started, right? So let's go into October 9th at $152.50. So this is what I basically did. I sold one contract to buy 100 shares of Square at $152.50 a week or 2 weeks, I forgot. And I made a premium of $192. So that is the second way of earning income when it comes to the wheel strategy. So one half is you're selling the obligation to buy. The other half is you're selling the obligation to sell. If that doesn't make sense, go check out the playlist. I made in-depth detailed about selling cash covered puts and selling cash covered calls. All right. So I don't really want to rehash everything again. Going back out into the option chain here, there are two different ways that you can make money here from the premiums. The premiums to sell call, the premium to sell puts. On top of that, there are two other ways to do this, all right? Going out of here, there is obviously going to be price appreciation. So my average cost for Square currently is $151. The price appreciated to $165. So when I sell calls, I'm going to be making money from the appreciation of the stock price. And on top of that, I'm collecting the premium. That's the third way of making money from this strategy. The fourth way for making money of this strategy is if you're doing this on a dividend stock, you potentially might have the ability to collect that dividends if you're holding it for long enough. I've done this previously before on ExxonMobil. Again, I've done this on AT&T as well and on Realty Income. The only problems that I'm having currently is the premiums for those companies, for those stocks, they're not that good versus the premiums on Square. So that's why I'm kind of focusing where I'm going to get the most bang for my buck right now. If we jump into the Gap stock, we can see I have a few calls as well. So Gap is a lot more affordable when you compare it to Square. And again, that's going to come with some other disadvantages as well. The premiums are going to be a lot lower. My average cost for Gap right now is about $13. Let's jump into the options chain here for October 2nd, which is going to be the end of the week. So if we take a look at the sell calls here for Gap, I can make roughly $33 for selling some calls at $17. For me, that strike price is too close to the current price right now. So I'd rather go up a little bit higher because in the long term, I want to keep my shares of Gap. And I'm not really willing to sell it at that price. But if it's selling at around $20, that's where I'm willing to sell. That's why you can see I have one contract selling at $20 here. And at the current price, you can buy this at $1. You can get a $1 premium for this. When I first did this, which was like 2 weeks ago when I first bought it, I think I got this for like $8 to $9. If we go out another 2 weeks here to October 16th, we can sell a covered call on Gap at $20 for $16. That's obviously going to tie up my shares a little bit longer, but $16 for just doing nothing, just having this contract out. Obviously, it could get called away, but you're collecting that premium. And like I said, it's a slow and steady returns that I'm looking for. I'm not looking for, selling these contracts and making, all right, for example, let's go to January 15th. I could make $133 to sell one contract here of Gap at $20, but this is just way too far out for me. All right. Let me show you the bigger picture here, okay? So $200 a week, that might not seem that much to you. Maybe it does seem a lot to you, but let's say we wanted to do this with a bigger company like Amazon. So Amazon is one of those companies where it's not really affordable for most people. I don't know anybody that has $3,000 to buy one share, but eventually this is where I want to be when it comes to doing the wheel strategy. And let me show you some of the premiums that you can make. All right. So if we jump into a sell call here and we just take a look around at some of these numbers that are really close, right? They're not that far out of the money. So if we jumped into this option here for selling Amazon at $3,180 by the end of the week, we can make almost $3,000 from this options contract. So if you were to own 100 shares of Amazon, that's going to be over $300,000. Not many people have that type of cash, but eventually this is where I want to be when it comes to the wheel strategy. I want to own high quality companies like Amazon, like Square, maybe Microsoft. So that's one exercise I want you guys to do is just go explore all of these really blue chip companies and explore their premiums because you'd be surprised. All right. I was really surprised when I saw Square was giving out like $200-$300 in premiums for such a decent quality company at that price level. So let's say we go into the sell put option chain here and we go down. Let's say you want to buy Amazon at $3,000. You think that's where the price is, or you had $300,000 just laying around. You could just buy this option contract. That's how much it would cost. 3,000 times 100, that's 300,000. You can make $650 if you bought this contract, and it expires at the end of the week. So if we go out another week here, and you think Amazon's a good buy at 3,000, so we're going to do this again. You can make $2,800 for this premium contract for next week. It will expire at the end of next week. So let's say on average you're making up to $2,000 a week from these Amazon contracts. 2,000 times 52, you're already making $100,000 off of a $300,000 investment. Not many people are going to be able to do this. Obviously, I'm not able to do this, and I don't know anybody who does have that much money to risk, but there's probably a select few people out there that are doing this, and they are just living off of these premiums every single year. So one thing that you guys should know as well, the further away out of the money that you go, which basically means the less risky it is, the less money that you'll be able to make. The further into the money that you go, the more money that you can potentially make from the premiums. So, for example, when it comes to this sell put for premiums for Amazon, if we go all the way next to the share price, we can see, let's say we want to buy this one right here. If we bought one contract here right next to the share price, we can make around $8,000 in premiums for the expiration date on this contract. So like I was saying earlier, not many people are going to be able to do that with Amazon, but a decent amount of people are going to be able to do that with Square. If you bought 100 shares of Square right now, that's about $16,000. Or if you have $16,000 laying around and you want to do this, you can do that right here. Or if you want to buy Square at, if you want to sell a put for Square, you can sell it next to, let's say, $150. You can make $144 in premiums. So that is probably what I'll be doing if I get assigned my contract for Square at the end of this week. I'll be taking that money and I'll be putting it here, and I'll be making $144 in premiums for next week. So I like to do these updates for you guys once every few months or so, because this is really slow and steady, but I do make a decent amount. If you multiply 200 times 52, that is roughly $10,000 a year. Leave some comments down below if you guys have some questions. Don't forget to like, subscribe, hit the notification. Go check out these videos down here if you want more from me. Go follow me on Instagram, follow me on my second channel, and I'll catch you guys out in the next video. Thanks for watching.